Okay, right. So today we'll see about order to cash cycle. Okay, the accounts receivable module theoretically. So what is O2C? Okay, so O2C அப்படின்னு பார்த்தீங்கன்னா this is a O2C சரியா பாருங்க. So initially when you enter a order, when you start entering a sales order, you will see whether the customer is having a credit limit. That's credit check process. Okay, we'll check the credit check of the system. Will check the credit check. Then we'll book the sales order. After booking the sales order, the pick release will happen. Okay, then ship confirm. Then it comes to invoice. So up to this, it is order management, the first line. Then it comes to accounts receivable through auto invoice program. The program runs, it is automatically comes to the AR module as an created invoice. If at all everything is set up properly for creating an order invoice. Then comes collection. Collection team will collect the amount as check or cash or wire type of payment. So we'll receive the payment. Okay. Then it will go to bank reconciliation. Normally when go to receive, it will not directly hit the bank. Okay, it will go to bank reconciliation or cash clearing account, the amount called cash clearing or clearing. So till the amount is knocked off in the it appears in the statement, it will be in the clearing account. Once it comes from the statement and it gets knocked off in the cash management module, then only it goes to the bank account. That's why we have to processing through a clearing account. If at all order bank, if at all the client installing Oracle cash management, we will go for Oracle cash management module, the clearing account. If not, we'll directly give the bank account. Okay, wa? Okay. So if you see here, can you read from here? In order management, the order is entered.
The ordering process leads to the shipping of followed by invoicing the customer and concluding the receipt of the payment and recording the bank statement, reconciling the bank statement. In order management, the order is entered with information that includes the customer, ship to bill, payment terms, order type, price list, unit price, and warehouse. Then credit checks are performed, the order is booked, and the order process proceeds through the workflow process. If the order is for a shipping term and the quantities are available, the process includes shipping execution. In shipping execution, the order is quick released, which generates the move order. Once the item is brought.
So you understand that shipping process order is picked and is brought to the sub inventory. If you are having sub inventory, then it processes through sub inventory and goes to the ship. It ships the ship confirm. So auto invoice imports invoices, credit memo, on account credit, other system into receivable, printed it and sent to the customer. So the revenue recognition program. So there is a program when you run the period closed or something in the AR. Revenue recognition also runs. Okay. There is a module called advanced collections. The receipt is then posted in receivable. Okay. Right. So this is the process. So this is what we seen. First is sales order, scheduling the process, shipping the goods, bill, presentment and architecture, auto invoice to receivable, then invoice, collection team, cash management, transfer to GL. This is the complete process. Okay. So whenever they ask for the order life cycle, you can tell this with accounting entry. We'll see the accounting entry later. So it is also categorized. Same process, how they do it. Okay. You can do the sales order can be Oracle order management or any other legacy system also. It can be interfaced through other systems. Okay. That's what they say. So you can view order and order line, both are there, scheduling process, pricing. You have the pricing process there. I think you will study this in detail in the Oracle supply chain management. Shipping. This is a shipping process. See, initially you've seen a full process of end-to-end. Now we see a step-by-step pricing, shipping, okay? Create detail order transaction, drop a load truck. It is a part of shipping process. So this is a process of auto invoice. So after the data goes to the interface table, it creates the invoice. If it is having error, it's stuck in the interface table, and we will correct the record. Okay. Then receivable process. Okay. Cash management. So this is a complete process they given. So how it integrates with other module, order management. See, in order management, you will create the customer master. When you create the order, it is linking with CRM, customer relationship management module, pricing module, shipping term, and you have inventory module, advance collection, other subledger, GL, AR, cash management. So these are all the how it integrates with other modules. Okay. Can you read this?
In the order to cash life cycle, order cash management collects the payments for customer invoice and posts the receipts. Yes, true.
So you are telling me this. True. Let's see. Yeah.
No, it's false answer.
Why it is false? The order to what is cash? No. What is cash management module? In cash management, they don't collect. No, it is only bank reconciliation. I told no. Okay. Cash management module only you do the bank reconciliation. Who is collect the payment? Collect the payment is go to collection module. Collection module in under the AR only. After collection only you will create the receipt. Okay. Right.
Yes.
Okay. Read it.
Which of these steps are in the correct order in the shipping process? New order is created, item are brought from inventory to staging area, inventory is decremented and sales order is updated, items are loaded and ship confirm processes. New order is created, okay. Items are brought from inventory to staging area to 3 inventory is decremented and sales order is updated. Items are loaded and it's order only, I believe. Move is
correct in the shipping process. Move order created, items are bought into the inventory staging area, decremented sales order updated, items all above. Items are first loaded and the ship confirm. I think 2, 3, 4, correct?
1 and 2. Inventory decremented.
So they given item are loaded into the ship. That's second one, third one, and fourth one, correct?
1 and 2. Move order is created, items are brought from the inventory to staging area. Inventory decremented and sales order update is not there. Items are loaded and ship confirm process is run. It's not there.
No. They want you to put in order. Okay. Which comes first? See, steps in the correct order only. Okay. So you have to put in order, which is first, which is second. Okay. It's not which is correct or wrong. Auto invoicing part of the accounting phase. Yeah, after the order creation we'll do correct answer. Okay.
Okay.
See, these are all in depth you'll study in supply chain management. So don't worry. Okay. So it is some help. So till now, what do you understand in order to cash life cycle?
You have to enter the cycle. You have to enter the order, check for the customer credit check is done. Then book the order. Once the order is booked, pick the item. Then confirm the shipment. Then auto invoices will take place. Invoice is created. Then it is go to the collection. the collection will collect the receipt and bank reconciliation will happen.
Yeah, correct. So that is the full process. So up to order management, we have seen, right? Okay. Now we'll see receivable. Till now we seen order management. Okay, we'll see the next module. What is happening inside the receivable module? So this is our finance module. Okay. Receivable process in position with the purchase cycle. Overall receivable process. Okay. So once again, order to cash cycle. Okay, same. Here it is more focused on AR. See, ordering, scheduling, shipping. Then it comes auto invoice to receivable, invoicing, collection, cash management, transfer to GL. Okay, right? So in receivable, what happens? Can you read the diagram? See, can you read the notes down? The receivable can generate transaction. Yeah, please.
The graphic depicts the order to cash process flow. Receives transaction data imported using auto invoices from Oracle Order Management. Oracle projects, Oracle service, Oracle learning and legacy system. You can also create transaction manually in the receivables application. After the transaction is completed, it is ready to transfer to general ledger through subledger accounting. Receipts earned and remitted against a transaction are available to cash management to reconcile bank statement. Receipts are available to transfer to general ledger through subledger accounting after they are entered and saved. Any open receivables are available for collection entity for advance collection.
Okay. So what do you understand?
Receivables can be created by any other system and apart from order to cash.
Yeah, it can be integrated from other module or created manually, imported or through manually also. Okay. Overall receivable. See, why we call transaction? Transaction is nothing but invoices. Okay. Because we have AP invoices also, we call invoices. To differentiate, we call transaction. But in the system, you can see only invoice, the names and all. Okay. Okay. You had correct data. Okay. So how to create a transaction? You are there?
Hello. Okay. Yes, sir. Hello.
Yeah. Oh, this is started. Give me one. You can read the next theory. You can see. No.
Yeah.
You can see the system.
Standard transactions include invoice adjustments, credit memos, and debit memos.
Okay.
Standard transactions are copied in receivables. A standard transaction follows the path of being reviewed, corrected, completed, printed, and sent to the customer. The receipt is entered against a transaction. Receivables accounting information is transferred to GL through subledger accounting after the transaction is completed.
Okay. You understood that?
Standard transactions include invoices, adjustments, credit memo, and debit memos. And copied to receivables. then transfer to the general ledger through sub-ledger accounting.
Okay, super. So this is the full flow. Read this. This is important.
Okay.
A overview of other invoice operation. So read this. This is, so you create an invoice. Suppose you receive a date. What we see. So you sell to a customer today. You sell. Okay. So this is what we'll see today. Correct. Hello.
Yes, hello?
Yeah. So you see that. So what happened?
Invoicing operation.
So if you see
You
today,
can
are
use
they
an
have,
invoice to make copies.
okay, then
Hello?
yeah, tell me.
You can use invoice to make copies. Use invoice copies, for example, for invoices which recur with the same content over a given period of time. Invoices can be created with or without rules. Invoices with rules can be manually created. Accounting rule indicates recognition should take place. The invoicing rule indicates whether to bill in advance or bill. You can let your customer make invoice payments in multiple installments by setting up time. When you assign a split payment term to an invoice, receivables automatically creates the payment schedule based on the invoice date and the payment terms that you can define. For example, a split payment term might specify that 40% of the invoice is due 30 days after the invoice date and remainder due 60 days after the invoice date.
So what do you understand from that?
So we are giving an option to the customer whether he can pay it in full or partially, or he has to pay in advance or after the billing period in arrears.
Okay. So what do you mean by customer invoice? See, you are having a shop or business. Now I will sell, tomorrow I will sell. So I will bill, my billing date will be very 1 or 2 days later or today, right? So when I send a mail through courier, my invoice they will receive in 1 week or 2 week or 2 days or 3 days. Okay. So there is a concept of invoice in arrear and invoice in advance. Okay. What is arrear means? So 5 years before I sold the item. Okay. 5 years, 6 years before I sold the item. I didn't receive the money. I thought, oh, they closed the company and went somewhere or is lost in the business or something. Or I am receiving the money now. Okay. 5 years before there is a 25 lakh balance is and some set off is happening or something. Is I am receiving the money now. So how will I account? So what we call is invoice in arrear. Okay. So arrear income. Suppose the income belong to 2015. Okay. I am only receiving the money now. If so, what the rule is saying is, this is saying, whenever you receive the money, there you have to recognize. So it has to go to 2015 income only. Okay.
Okay.
So if you had now, you have to unnecessarily pay a higher tax. So the revenue would go to the correct. Suppose that we are receiving for last 5 years in equal 15, 16, 17, 18, 19. It has to be split and accounted. That is called arrear. Okay.
Okay.
Arrear. What is advance? So I am giving an AMC. AMC today is October 2020. They will give for next 1 year, right?
Yes.
Next 1 year you will receive the income. Okay. What happened? Next 1 year if I receive the income, today I am receiving 1,20,000. So I will receipt of amount is 1,20,000, but we have to do the service for next 1 year, right?
Yes,
Okay.
sir.
If so, 1 month I receive the amount and 11 month I cannot do free service. So we have to
Okay.
bifurcate the revenue to the next 12 month. That is called
Okay.
invoice in advance. And also your
Okay.
revenue should be stable. If you are not accounting
Okay.
in, see, December you have no sales. At the time this sale
Okay.
is there automatically, right? Because already you
Yes,
receive the
sir.
money for that. You are doing the service. So that is
Okay.
called invoice in advance. Okay.
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 Mm.
Then you have the rules. Another rule. What is accounting rule and invoice rule? Another rule is 1,20,000. See, they are giving more work in December and no work in January. Okay. Like that, work may
Okay.
differ. Whenever there is a work, only you send the people. Suppose you want to account whenever I work. That means variable. Okay. Suppose 30,000 of the amount you have to put in January. Only 10,000 is work in December, and February no work they called. Maybe December no work. It is a holiday period, right? So they sold that zero amount. That is variable method of accounting. Okay. If it is fixed, every month 10,000 like that. Now you understand the difference, right?
Sir, can you recap in accounting rule and invoice rule?
Yeah, I'll recap. So invoice with rule, there are three type: installment. Installment, you know, you give money in installment. Accounting rule, installment rule. So we'll see.
Okay.
It is balance for. Okay, accounting rule. See, I'll read. Okay. A invoice can created with or without rule. It is an optional field. Imported or made. Accounting rule induces when revenue recognition should take place. When revenue recognition, I told accounting rule, maybe in arrear, maybe it is later. Invoice will indicate whether in bill in advance, first period, or bill in arrear. Okay. You can let your customers make invoice payment in multiple installment, but paying a here they given a single word, but while going down, we'll see an detailed explanation. Okay. Adjustment. What is adjustment? Adjustment entry. Suppose for the last January 2020, I created an invoice. Now the customer comes, there is an adjustment in the invoice. There is something done. So both the government agreement, okay, we'll adjust $500. Okay.
Mm.
We'll adjust $10. Suppose the customer has to give me 50,000. He is giving me 49,100 only. Okay. And 900 is balance. And finally we are selling, he will give or not. Is like finally we are settling, he won't give. I have to adjust, right? It should not be a pending for a long time. Correct. So we'll pass adjustment. We cannot alter the invoice. So there is an adjustment setup is there. Above that, we'll make adjustment. So you cannot make adjustment for everything. Suppose entire 50,000 you want to make adjusted, it is a wrong move, correct? So adjustment means there should be a partial amount, 5% or 100%. So there is a limit, approval limit. See here, validation process before being approved. Adjustment can increase or decrease the remaining balance. Okay. Adjustment is a late charge or policy or like that. You can add or decrease in the bill. Okay. We can see in the system once it is ready. Okay. So that is called adjustment. Okay. Okay. Manual adjustment created in one transaction, we want to be adjusted. Automatic adjustment is for a group of transactions. So there is a manual adjustment and also an auto adjustment. Okay. Okay. What is credit memo? Tell me, you would have an idea, right? Hello.
Yeah, yes, sir.
Yeah. You can tell me what is credit memo according to your knowledge.
Credit memo.
See, there is an invoice.
Hmm.
Opposite is credit memo. Whenever you return, you got reverse, right?
Okay.
So that is a credit memo. Credit memo for entire reversal, or you want to do for uh, adjusting something or something. You can
Having discount.
discount. You can do it. Okay. So credit memo balance due. There is a balance due. You can adjust. It is like a negative thing. Okay. See, 100 quantity I am sending to a customer. She is saying there is a sort of one quantity because I don't want to cancel the invoice and create an invoice for 99 unit. Better I'll create a credit memo for 1 unit. Okay. So 1 unit will be minus and net off against the 100 unit. Understand, right?
Okay. Okay.
That is a simple reason.
So
Whatever you
outstanding will be reduced.
correct. Against an invoice. Credit memo should be created against a single invoice. Okay. Can you read this receipt and remittance?
Overview of receipts and remittance. This graphic depicts the receipts and the remittance process flow. Receipts can be entered in one of the three ways. So can you scroll down to
Okay.
manual, quick cash or automatic? Manual, which indicates cash and miscellaneous receipts. Quick cash, which includes cash and auto logbox. Automatic, which includes credit cards, direct debits, and ACH bank account transfers. Remittance are a group of receipts remitted to the same bank and bank account, similar to bank deposit tickets. Receipts that are applied to an invoice or a customer account can be reversed or reapplied at any time as long as they have not been updated from the system. But once entered and saved, the receipt information can be transferred to general ledger through subledger accounting. The receipts do not have to be reconciled or applied to an invoice.
Okay. So this is a receipt and remittance. Three type: manual, quick cash, automatic. Okay. Quick cash is including auto logbox. You know auto logbox setup, right? Auto logbox is from the bank statement automatically it will create as a receipt and knock off in the MS receipt. That is called auto logbox. Okay. You see the type of transaction with the accounting. Okay. Let me open that. Like this, you can go through. Okay. You can open the notes in the meantime. Hello, are you there?
Hello, sir. Yes, sir.
Okay, we'll see a theory 1 minute. Theory in the short. So now you are having some idea, right? O2C cycle.
Yes.
Okay. I'll share a different screen. You can see accounts receivable.
Yes, sir.
Okay. So this is very simple notes prepared by me. You can see in the volume 1, right? I given word notes, right? Yeah. There. Can you read now?
Account receivable. Effective customer management is a key of any organization. Account receivable model helps on enterprise to manage to customer based sales invoice and receipts from customer effectively. Account receivables a subledger. Account receivable is a subledger in which one can track customer transaction receipts and collection activities. Subsidiary ledger to Oracle General Ledger. It is a subsidiary ledger to Oracle General Ledger and it's fully integrated with General Ledger. All the accounting transactions will flow to General Ledger with full audit capabilities. Likewise, one can drill down from the General Ledger journal entries to the Oracle Receivable Accounting flex fields distribution details. Mainly deals with sales invoice, receipts and collection activities. The main focus that account receivable is customer entry, sales invoice, cash receipts and collection transaction.
पूरी generic இருக்கா? Okay.
Next.
So, okay, this all we see in O2C, and in AR we have two flex fields: sale tax location flex field, okay, territory flex field. Okay, we have sale tax location flex field. So the sale tax location flex field is key, and we have territory. Which territory? Go to sale. So these are all mandatory segment. Okay. The information flow. When you do AR setup, you have to start with the system option. Okay. In the system option, you have to open ledger, R12 ledger, tax method, everything in a tab, it will be there. You have to check it. When you see practical, we'll see. Customer profile. Okay. When you create a customer, first you have to create a customer profile class. Okay. Because when you create 1,000 of customer, you don't have to fill everything.
Okay.
So, can you read it 3 types?
Similar credit worthiness, business volume, payment cycles. Credit limits, payment terms, statement cycles, invoicing and discount information.
Okay.
One can also determine.
1 minute. Okay. Before creating a customer, you have to judge based on these terms. Okay. A new customer comes. Okay. So you have to judge his credit worthiness, how the business volume, payment cycle. You will judge be based on his previous things, or you will have some expert team, right? Like that. Okay. Okay, right. Then you see that I told you cannot directly create a customer. So there is a customer profile class. When you create a customer profile, you will fill all this. Suppose I divide a customer good, bad, and medium. Okay. Good, bad, and normal. So what is a good customer? So if upon the similar credit worthiness, I'll give more credit, correct? Business volume will be more. I'll give the more limit. Payment cycle will be very, I will give him 2 months or 3 month credit. Limit will be higher. Payment term, I'll give 2 or 3 months. Statement cycle will be generated. Invoicing. So these are all different. So what is a bad customer? I'll give him only cash. I give the less credit limit, if at all needed. Payment terms should be immediate, correct?
Okay.
Okay. Right. So whenever I create a new customer, I will attach any one of the profile class to the customer. Suppose I see I have a doubt in the customer, I will attach the bad customer profile class. So everything will be immediate. Because I tell them, so for 1 year I will give only immediate, then based upon your thing, we'll increase the credit limit, right? This is a normal thing, correct?
Yes.
So that's why. So this is how the transaction flow. The first system option, then it will search the customer profile class, then it goes to the customer master, address, business level, like that. So these are all tabs available in the system option that we can see directly in the system. Okay. Here only we give this account and all. For AR system option is very simple. Because we have so much tab. Okay. So much other tab. Okay. These are all directly we have taken. See, They have put classification, high risk, low risk, moderate risk, like that. Okay. Okay, right. Now we come to the important matter. So in the transaction, what are the type of the invoices? Okay. Invoices, debit memo, credit memo, chargeback, commitment, and deposit. Okay.
Okay.
So invoice, you know.
Okay.
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 You know about invoices. What is commitment? What is guarantee? Guarantee, you
Guarantee
know,
is a
normal.
supporting document. Supporting
Okay.
document.
Okay,
It
super.
should be given.
So from
To
the
give
normal term, you told it's a supporting document. How you will create in Oracle a supporting document? Everything has to be a process, right?
Yeah.
Correct.
Yes. Mm.
How will you create an Oracle? One minute. So what are the type we seen guarantee? Okay, we'll see one by one. So how will you create a transaction source? See, while create a invoice, there are two types. I told it can be manual, it can be imported. That is called transaction source. Source, மூலதனம் எப்படி வருது? Journal பார்த்தல journal source, correct? Okay, ஓகேங்களா?
Yes, sir.
Okay, right, no problem. பார்த்தீங்கன்னா first you have to set up the source. Source எங்கேருந்து வருது? If you are having imported, you have to create an imported source and connect to the transaction type. Maybe manual or this. For creating only setups I have given here. Entering the transaction. Okay. Then you have to create a transaction type. What is transaction type? Na those like invoice type. Okay. Invoice type the transaction type. Debit memo, credit memo, that and all. Okay.
Debit memo means credit memo is created against an invoice.
Okay, I'll tell you example. Okay, in accounts payable, okay.
Okay.
Suppose I am sending 100 units of television to a customer in Mumbai.
Okay.
So it goes to a container. When the people putting the godown keeper says that one unit is damaged. Okay, one unit is damaged. So what happened when he finds out and he will raise a debit memo to us? That is also like a minus only. Because it is finding by the customer, he will raise a debit memo. So when he pays, he will pay for 99 unit only. Okay. Okay. So another scenario, the customer orders 100 quantity. Okay. Right. Customer order 100 quantity. I am sending him only 95 quantity, but I generated bill for 100 and I know that while loading, so I will give along with the invoice, I will send him 5 credit memo, 5 unit, because I found out, when we found out it's a credit memo. Okay, understand? Okay, so ultimately the logic is same. Whoever
If it is
creates,
a supplier or
they find out, we find out. Okay, simple. This is AP. In AP, no worries, because both are negative. Whoever find out, you have to deduct in the invoice. Oh, we are in AR. In AR. Okay. AP over. Now it is AR. I am the customer. I am supplying to the customer. I am the proprietor. I am the supplying to the customer. Now it is reaching the customer, or I find out, or both find out, we create a credit memo only. Okay. What is a debit memo? I am sending him 100 goods. Immediately the customer wants, I want 50 more. At that time, I told him, sir, the freight is already given for only one vehicle. If I give to 150, I have to load one more. So you have to add the freight. Okay. Right. Freight charges is to be additional. So what they say is, okay, already I billed for only one lorry freight, right? So I will add debit memo, will add freight charges to the current bill. So that is called debit memo in the AR. So in the AR, debit memo will be additional amount to the invoice. In AP, debit memo is a negative amount to the invoice. That is the difference. You have to remember. Okay. Right.
Additional amount in the.
It is plus. Debit memo is plus in AR. In AP, both are minus. Okay.
But in AR credit memo?
Both are credit memo negative only. AR.
AR.
Yeah.
Okay. Okay. No, but the thing is, credit memo is only difference. Credit memo is created by the supplier, and debit memo is created by the customer.
In AP, right?
No, AR. No, we are now discussing about AR.
Only AR. AR over create the logic is same. Credit memo. No, in AR only we create, right? Because the ultimate customer is not a businessman, right? He is an end user. End user will not create. Only we create. So we create credit memo. More or like if you deal with business, it is also they create. Okay.
Okay.
The logic is both create a credit memo. Even if he create a debit memo in his book, it is a debit credit memo to us because he is AP guy, right? We are only AR. We are only selling. For us, it is negative. When we raise a debit note, it is adding to the bill. Okay.
Okay.
And okay, understood. Right. Okay. Okay. Now we seen the invoicing rule. Initially, we seen na invoice. We'll see in detail. Okay. You have time or?
Yeah, I have time.
We'll see in detail. AR only theoretically you have to be strong, but very easy, interesting if you think. Okay. Invoice with accounting rule. Total fixed, variable, deferred. I told na types of the fixed means fixed among the period. Prorate even. Variable, I told whenever the work happens, you can add or deferred. Deferred means may happen or may not happen. You know, deferred accounting also there is a deferred. You see big companies, you know, they will put in the balance sheet. Some lawsuit is happening. You have to pay the tax or not. They don't know. They will put there is a deferred tax expense, deferred revenue income like that. Okay. Because
invoicing account renewals. Yeah.
Okay. We'll see the accounting entry. Okay. I enter the steps how to create also here. Anyway, you will find there. Okay. Debit revenue, credit unbilled receivable. Okay. Debit what comes in revenue? See, debit unbilled receivable, credit revenue. So revenue is booked. Okay. And debit is unbilled revenue, receivable. Normally in the ERP, you book receivable to revenue. Here it is unbilled revenue. Okay. What is unbilled revenue? That is what? It is not unbilled receivable. Unbilled receivable means you are not receiving now. It is unbilled. You receive the money, but the receivable is not billed. Okay.
Okay.
This period, that is what. See. So whenever per month it is getting knocked off, you will reverse per month by month. Okay. See, the unbilled receivable is credited. Every month they will credit it based on this. Okay. So unbilled receivable is an important thing. That is called same. In invoice in advance, you will get an unbilled revenue. Okay, you got the money, but that is not a revenue now, correct? Revenue, it is bifurcated in the later period, right? That's what. Now I'll show you the O2C accounting entry, and I'll show the receipt. So order to cycle, we see in the cycle, right? In the polymon I given at the end. Okay, see. Okay. So when you create a sales order, there is no accounting entry. Okay. Okay.
Yeah.
Okay. When you create and finish the sales order, accounting entry will not generate. Sales order pick the second. One sub inventory to other sub inventory, accounting entry will be generated. But ultimate effect for accounting, it is inside the sub inventory, no finance effect. When you create a sales order, debit cost of goods sold, sales order issuing a sales order, the final stage, okay, to sub inventory account. Sub inventory, you can put it at material account also, okay. So it is adding the original total cost of the material. When it comes to receivable, you can see plus profit they added, right? You have tax, you have freight, you have revenue, okay. So 100 is the revenue, additional tax. So here our accounting entry starts. Cost of goods sold to sub inventory. This is the first entry in the, only one entry in the order management. And you can see receivable to tax to freight, whatever will be added in the invoice stage only, correct? And right side I given from which setup it is taking. Okay. So next step, receipt. You are receiving the amount. Okay. Cash to unapplied. Unapplied to receivable. Okay, right. First, okay, receipt has 5 steps. 5 steps. See, okay, you receive a money in the bank. You are seeing the bank statement. You don't know who given, only the amount is there. What you do? You are having lakhs of customer, millions of customer. Okay, R12, Vodafone, like that. Okay.
Okay.
So I receive 1 lakh. So where I will put? I have to account it, right? So there is a concept called unidentified. Here, correct? In case of receipt without customer or transaction number, bank definition form, I will take it. Okay.
Okay.
It will be cash or bank. Debit out comes in cash or bank. Credit unidentified bank. Okay. Understood?
Yes.
So after 1 week, a customer comes to the office with the slip. Sir, I only remitted. We are asking, oh, you only remitted. Now, we identify the customer. Okay. Second step. See that unidentified debit and unapplied credit. See when customer identified. When the unidentified debited, it will get knocked off. Now it goes to unapplied account. Second step. What is unapplied? When you know the customer, you don't know which invoice you have to knock off. Correct? You will be having 100 pending item or 10. Which invoice you will knock off with the amount? You don't know. Correct?
Yes.
Okay. Okay. Next. After unapplied, see that here, unapplied, where is that applied? Yes. Cash to unapplied, unapplied to receivable. It should be goes to, you have to click the applied button there. When you apply to the invoice, it will debit to the applied and credit to the unapplied. And where it is in credit, right? See here, debit to the applied amount and credit to the applied. In case of receipt with the customer, application, before application of the receipt, after application, here it is unapplied to applied or receivable. It is going to the receivable account at final stage only. If everything you know, directly it will go here. So these are the steps in the receipt it you will have. Always you see balance in unapplied, unidentified, applied. Okay. Okay. Adjustment I told no, adjustment to receivable. Receivable account you are adjusting expense. Adjustment to receivable is the account. Okay. Now in Excel I will show you how the accounting entry will happen. Okay. Now you understand overall AR, right? What are all happening?
Yeah.
What is the setup? And I think once we see the system, you will understand easily. The theory only you have to be stronger. Okay. On the day I sent you on Excel, right? You can see the Excel sheet. No? I'll share the screen. Wait. Okay, you can see the Excel now.
Yeah.
Okay. Yes. So first, what we see in AR, the transaction. First is invoice, right? Invoice we call transaction in the AR. Invoice. Okay. In the invoice, what happens? It is a normal invoice. You are going to a customer. So what will be the accounting entry? Debit, customer or receivable account. You have to receive the money, right? Customer or receivable account. Credit, revenue. So whenever you create a see, what happens in the normal account when they sell a transaction? If you ask a journal entry to a basic commerce student or a school student, okay, they will say, what is the journal entry for the invoice? They will say cash to sales. Okay, definitely. See, they will, everybody other than ERP, they will say that first step itself, you will receive the cash. But in Oracle or SAP, you see that first step, you are giving only invoice and credit. Even you receive the money is secondary. Okay. First step is receivable to revenue. So second step, receipt of amount after the collection. Okay. What is the entry? The receipt. Against the receivable, you will get in bank. If not, you are having a cash management. Okay. Cash management module. So, yeah. So, you understand?
Yeah.
Okay. So, if you have a cash management module in the company, here no cash management. Okay. First, because accounting entry is very important to go. Because with the help of accounting entry, you can find where the issue is. Okay. Finance consultant, we should know where. And see here, cash management module. Okay. Here, no cash management module. So directly we are hitting the bank. Here, what I told, if no cash management, if cash management is there, here, it will not hit bank. It will go to bank clearing account, bank or cash clearing account. Okay. That's cash. Third step, the reconciliation. Cash management module, you will move there. Once you reconcile, credit and it will go to the bank account. Ultimately, the net is what? Bank clearing and blank clearing will get knocked off, right? Here, see, receivable and receivable knocked off in both. Finally, the entry is the basic book. Debit bank, credit revenue. This will be the final entry. Here, see, debit bank, credit revenue. Here also both receivable got knocked off. So this is the basic accounting you should end finally. Okay. So this is a normal invoice. Okay. Normal AR transaction. Okay. Now, what will happen? Same when I create a credit memo. Okay. Hello. Sir.
Sir, okay, sir.
Okay. You understood, right? Clearly?
Yes, sir. Yeah.
Okay. So whenever you understand theory plus with the accounting entry, you understand everything because nothing in the
Okay.
system, all the ERP is same. Oh, so okay. What is credit memo accounting entry? I told all the reversal. Just it's a reversal.
Okay.
First entry
Okay.
is credit, next is debit.
Okay.
Okay. You can change it also. Otherwise, you will get confused. Revenue debit, receivable credit. Otherwise, same. You put amount as minus. Okay. But that is not the correct process of accounting. Okay. So what happens? Revenue debited and so why receipt? See, when you are deducting also, you can knock it off through receipt. Okay. The receipt account will not come in some cases. What happened? You will knock it off within invoice itself. When invoice amount is 20,000, you knock it off to net, right?
Okay. Okay.
Yes, you do it. Okay. Then next, debit memo and invoice entries are same. So whatever you do for, first we seen in transaction credit memo, next is debit memo. Okay. Debit memo and this is same in the AR. Okay. Okay. Then what is remaining types? We have deposit guarantee and chargeback. What is chargeback? Chargeback is nothing in the receipt. After a long time, you are not receiving that. You are charging back to the customer. You cannot create manually. The receipt screen I'll show you. If you click it, it will create in the latest one. That is called chargeback. That I'll explain in the system itself. Okay.
Okay.
AR deposit. See, like you said, a new customer is coming. I cannot give the goods easily, no, on the debit. I have to collect some deposit, na?
Yes.
Okay. So deposit is also a sales.
Okay.
Deposit is not a sale. You are collecting money in advance. It will not in the normal transaction, right? So instead of revenue, it is deposit account, and revenue account is part of P&L or balance sheet. This deposit account form part of our fixed assets. It's a liability. It's a liability.
So, yeah, we have warning. We have to give it to the customer.
It is, yes, at the end of the business, it is a liability.
Yes.
And revenue is form part of the revenue part of the profit and loss account. Okay.
Okay.
But it will be in the liability side, deposit from customer. So whenever you return the deposit, okay. So deposit also when you receive from bank, it is like this only. Okay. So any doubt? Bank, this is name or some only. So the ultimate entry is bank. Debit what comes in bank, credit deposit account. Okay. Credit. That's why it's a liability. This is deposit. Okay. Next, I am coming to commitment. Commitment is also a part of deposit. Okay. So what will be the difference? Commitment. Tell me.
Okay.
Commitment means it's a commitment only. See, I am telling you. I will complete before end of the October your all classes. This is commitment. Okay, you are also agreeing. I am also agreeing. Okay, so it is not a written document, not transferring money or nothing. So we'll make an internally because we know each other or friendly or through somebody. It is a commitment, correct? Through some common friend or something. What is guarantee is you are giving to someone. You are going to someone depositing some money. That is what guarantee. That is what we see in first. Commitment doesn't involve money. Then why it is in Oracle? Tell me. Commitment doesn't involve money. Okay. So what happened in the commitment? There is a bar. You enter the see. I am a regular customer. You are going to join. I am telling them, sir, he is Mr. A. I am referring you. Okay. He wants to join your business. So what he will sell? So he will ask for a commitment. So I am will tell no Jamin Kail Tamil.
Yeah.
I am telling, sir, I am going to give him up to 1 lakh. I am okay for you. Okay. You can give him 1 lakh goods. I am okay. So they will create a commitment transaction without a financial thing. They will put 1 lakh there and put my name. So Mr. S is committing that up to this much he is given. So they will create a transaction in the system because it's a MNC company, no? How they will believe. Okay. So up to 1 lakh, it's called a commitment. Okay.
Okay.
So these are the type. And we seen chargeback also. Chargeback also. Chargeback I told in the receipt side, and you are not getting anything for a long time. And we are charging back to the customer. We are canceling the receipt and we are charging. That is called chargeback. So we are canceling a receipt and we will create another invoice. Okay. That concept we will see later. Now you understand what is transaction. That is invoice, correct?
Okay. Invoice.
Invoice
Yeah.
with cash management module, without cash management module. Okay. Right. Credit memo. Knocking of the invoice. Debit memo. Right.
Yeah.
And deposit and commitment. Okay.
Commitment.
Right. So these are all invoice transaction types, correct?
Okay. Yes. Yes.
So this is the AR main part. Then receipt. We'll say receipt. These two are the main things you know. Okay. So receipt was what I told. What is the first step? Receiving of money. First, receiving money in bank. Okay.
Yeah.
I don't know anything.
Mm.
So first I go to debit what comes in bank. Always clearing will come. Credit what goes out. I don't know whose liability it is. That is called unidentified. It will stay in unidentified account.
Okay.
1 minute, sir. Call is coming. Sir. Oh, blank call. Okay. So bank to unidentified. Okay. So suddenly I see it's from a bank. I am getting 25,000. Okay. Right. So I cannot let that to. Hello.
Yes.
You are there. Okay. Suddenly, so I cannot leave it blank. So unaccounted, I have to tally the bank, right? So this is called unidentified. First status of the receipt. What is unidentified? Customer not known. Okay.
Yes.
Okay. See receiving or okay. The first category. That is customer not known. That means this will be the accounting entry and you will park the amount here. Then after some time, okay. Customer known, second, okay. Customer known means what is the accounting entry will come? You will debit unidentified, credit unapplied account, okay. So what happened now? Your unidentified account gone, right?
Yeah.
Your unidentified account knocked off. Second. Okay. Now tell me what is the third step will be?
We have to balance the invoice
Okay.
transaction.
We have to balance the transaction. Exact. Super. Now there are 100 transactions. Which transaction you will do? That's why we are in the second. Okay. Now which transaction you will do? That is the third step. Exactly. You identify the transaction with the customer or something. Okay.
Okay.
That is the third step. Customer known.
Okay.
Third, customer known means invoices known. Okay. Customer known and invoices to be knocked off identified. So your unapplied debit and what happened now?
The invoice.
Applied will come here.
Okay.
That is will be the invoice. It will be changing from company to company. What account they are creating. Okay. So now you have only applied to bank. Now it is applied to the correct one. Okay. Okay. So we seen this scenario. The finally bank to apply. Okay. So you know that you know what are the accounting entry with clearing account.
Yeah.
Okay. Right. Correct. Then there is one more account called on account. What is on account? You heard? See on account. So these are all normal 3 steps. Okay. Fourth, they will see on account. What is on account is okay. See there is an invoice amount of so this invoice we'll see there is an invoice amount of 25,000, right? So customer remits 25,000 12. Okay. 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 So what happens, no? The customer account, the receivable will get knocked off 25,000. Okay. The remaining amount, if you put same, no, people will ask why you are a balance in having unapplied, right? It is not applied, right? Okay. So what happens? See, from the bank account, it may be not be a correct account. Okay, others are okay. It is I am giving for your instead of the unapplied, unidentified on account will be parked at 12. Okay. So after next invoice, this on account we will clear it and put on to the we'll knock it off. It is a temporary parking account for a minimum expense. We don't want to return this, right? 10 rupees, 2 rupees and all. Even the big amount customer said we'll adjust in the next invoice, you'll keep in the account. Okay? Right? So you know unidentified, unapplied, on account. Okay?
Yeah.
Okay. Right. So we know invoice in advance, invoice in then invoice rules. Accounting rule. What is one more thing? Accounting rule.
Invoice. Invoice accounting.
Invoice rule 2 type, in arrear,
Advance.
in advance. Accounting rule fixed,
Variable deferred.
ஒரே ஒரு நிமிஷம். ஹலோ
என்ன காசு போட்டீங்க? இல்ல அது நேத்து உள்ளது.
எது நேத்து உள்ளது?
இன்னைக்கு உள்ளது என்ன போடல. இனிதான் போடுவாங்க.
252 எதுல உள்ளது?
இன்னைக்கு அது பண்ணி போட்டீங்களா? இன்னைக்கு உள்ளது போடல.
நான் அப்புறம் பண்றேன்னு சொல்லு.
சரி சரி. சரி. ஓகே.
எதுடா? கேக்குதா?
Yes, sir.
ஹலோ சார் கேக்குதா?
Yes, sir. கேக்குது.
ஹலோ.
Yes, sir. I am able to hear you.
ஹலோ சார்.
கேக்குது sir.
ஹலோ.
I am able to hear you. கேக்குது sir.
ஹலோ.
கேக்குது sir. Hello.
ஹலோ.
Hello. Hello. கேக்குது சார்.
கேக்குது. கேக்கலையா?
கேக்குது சார். எனக்கு நல்லா கேக்குது.
ஒரே ஒரு நிமிஷம். ஆடியோ செட்டிங் இதுல எடுத்து விட்டுரு. ஹலோ. இப்ப கேக்குது.
கேக்குது சார்.
ஓகே, இது வரைக்கும் உங்களுக்கு புரியுது இல்ல?
புரியுது சார்.
ஓகே. ஸோ அக்கௌண்டிங் ரூல்ல வந்து ஃபிக்ஸட் ரூல், வேரியபிள் ரூல், டெஃபர்டு. ஓகே. இப்போ வந்து அரியர் இன்கம். ஓகே. நார்மலா ரிசீவபிள் டு ரெவென்யூ தான் அக்கௌண்டிங் என்ட்ரி. ஓகே. ரிசீவபிள் டு ரெவென்யூ, ரைட்டா? ஸோ அரியர்னா என்ன சொன்ன? அரியர்ஸ் you are receiving now only, right? You are receiving the amount now only, right? But the revenue already you build it. Okay. So it is unbilled receivable. Correct? நான் சொல்றது சொல்லுங்க. Unbilled receivable to revenue. To how many periods we are seeing? Hello.
Yes sir.
Yes.
Hello.
Yeah. Unbilled receivable. Okay. So total invoice amount is 1 lakh. So I want to divide into 1 lakh 20,000. Okay. I want to divide into 12 months. So I can go for 10,000. Okay, arrear income. So, okay. Better we'll take an easiest example. Okay. 30,000 for 3 months. This is the thing we have to do it. Okay. Here. Okay. So first month. So what is this rule? So this is arrear income. What is the accounting rule? This one you can see. Tell me.
Accounting, it's it is advance. Yeah.
No.
Unbilled receipt.
Unbilled receivable na advance. Arrear I told. Okay. Arrear income. This fixed or variable?
It is they are given fixed, but we are 3 months we are distributing it.
This is fixed because fixed 3 months 10,000 I am distributing. Okay.
Yes.
So how come arrear month variable will come? Arrear income variable. 21,000. Total is 30. So this is variable arrear. Okay, correct?
Yeah.
Okay, right. So same we have to do for advance. Same 3 months. Advance fixed will start. Okay. Advance fixed I told. Because you received in the revenue is not booked, right? You are receiving the income in advance. It should be unbilled receivable. Okay. Unbilled revenue. Okay. Others are same. Receivable to revenue, unbilled revenue. This is fixed. So variable, same amount will be changing. Okay. You check this correct accounting entry or not and revert me next class. Okay. This is the variable. Okay. So you see that only the accounting entry, this is unbilled, here unbilled revenue, fixed variable, the amount varies. Okay. And deferred, you know, it may occur, may not occur. If it occur, it will be, you have to do with the arrear or this rule. Okay. That is the deferred rule. In the deferred, advance arrears. Okay. Two you have to define that you do work and sell. So these three will come. So these are all part of the revenue recognition.
Okay.
And also one more thing you've seen in the revenue recognition, installments. Installment, you know, the normal installment. Okay. How many installment you want to pay? You are buying a fridge or computer. And one more thing, copy invoices in the, that is also multiple. But that will not fall here. We seeing accounting rule, invoice rule, installment. These are the main thing. So I think you are catching all the concept, correct?
Yes.
Okay. I think if you read one time full theory, you will be easily understand. Okay. Okay. Now we seen O2C cycle, transaction type, receipt type, auto invoice, and that and all. Okay. So I think with this, if you read fully, you will understand everything. Okay. Right. Okay.
Can you please share me the Excel sheet?
I will share. Okay. One.